All right, this is my Robinhood homepage here, and a couple things I want to point out before I move to the next page. I want you to look at my buying power. My buying power is $9,441.28. If you look at the stocks that I own uh, the NAC 1,000 shares, fuel sales 500 shares. That fuel sales actually last week was a cash secure put for 10 contracts, and which is 1,000 shares. Uh, for it had a strike price of 15, expiring on the 19th of March. At the close of the market on the 19th of March, fuel sales closed at 14.97. So initially, I'm thinking, okay, I just bought 1,000 shares of fuel cells at $15. However, when everything settled on Saturday morning, when I looked, I seen that it assigned me half of those shares, 500 shares. So I picked up 500 shares at 15 bucks, and the other 7,500 was put back into my account. So what I'm going to do now is I'm going to actually continue on with the wheel strategy. However, I'm actually going to have two plays going at the same time in the wheel strategy. I am going to take that 7,500 bucks and do another cash secure put with a strike price of 15. I'm looking at the expiration date of the 26th of March, which is this coming Friday. And then I'm going to take those 500 shares and write a covered call. I'm also looking at a strike price of the 15th, expiring this Friday as well, which is the 26th of March. So what I want to do now is I'm just going to go to the history real quick so that I can show you a few things. All right. Here you see that on the 9th of March, that's where I transferred in $15,000. Um, this is where I have my 10 contracts of fuel cells, and did the cash secure puts, 10 contracts at 52 cents. Immediately 520 bucks hit my account. Here you see the $15 put expired, and here you see the other half that was assigned. All right. So let's go ahead and get back to the portfolio page and do this play. See what we come up with. Now remember that since we're going to do 5 contracts with a cash secure put, we're looking at about 7,500 bucks is a $15 strike price. So 7,500 bucks of that 94 is going to go into collateral. So that's going to take me down to about 1941.28. But you got to realize that we're going to pick up those premiums. So whatever we get in premiums, you're going to add that to that 1941.28. That's money that hit our account that we can do whatever we want with it. So let's go ahead and get started. Let's do the cash secure put first. All right. Go to trade fuel cell options. We're going to sell. It's going to be a cash secure put. And I am looking at the $15. All right, looks like the fifth for the $15. We're looking at 101. I'm going to hit continue. I want 5 contracts. Good for the day. Once it's executed, we're looking at receiving a credit of $505. So I'm going to review the order. Five contracts, 101. Okay, collateral, $7,500. You're agreeing to buy 500 shares of fuel cells at $15 on or before March 26th. All right, I'm going to go ahead and submit. All right, pending, and I'll hit done. So now what I'm going to do while I'm waiting is now I'm going to go. Okay, so it actually happened. All right. Now, if you look, now we have that 5 contracts, cash secure put. Remember, $7,500 went over and it's going to be held in collateral. So that would have brought our total down to 1941.28. And if you look, the buying power now is 2446.26. So the premiums received, let's take a look to see exactly what was the premium received. History. There we go. Premium received was $505. All right. Let's go back here. Now let's do the other play. Remember, we have 500 shares of fuel cells. What we're going to do now is write a covered call. So we'll go back to fuel cell, trade fuel cell options. Now we're going to sell a call option, and we're looking at the 26. We're looking at 15 bucks. And that's what we're going to go for. So I'm going to hit that. And we're going to continue. We're looking at, since we have 500 shares, we're looking at 5 contracts. It's going to give us an additional 320 bucks. If this executes, we're looking at receiving a total of, for a 1 week play, of $821 on a 821 divided by 15,000 will give us a return rate of 5%. So let's go ahead and do this. Review order. All right. 5 contracts, 69 cents. Gold went up a little bit. You agreed to sell 500 shares of fuel cells at $15 on or before the March 26th. And if we notice, it just went up again. And you know what? Before I submit, what I want to do is I want to take a look at something. I'm going to go to the Chicago Boards of Option Exchange. I want to see what's going on with this stock. If it's going to be running up, if it's running up right now, it's reversing trends, I might hold off a little bit and wait till it gets to about 15 bucks, because here it's showing is at 14.69. If it can run up to 15 bucks, I can actually get a little bit more money when it comes to these premiums. So I know the Chicago Board of Options Exchange, I think there's a delay, complete about 10-15 minute delay. So let's do this, get more of a real time. I'm going to go to watch my watch list here. I'm going to sort this. These were all the stocks that I'm looking at to possibly do deals on once I see a price within the area that I want, within the price target that I want. So let's go down to fuel cells. There we are. So now it's up to 1477. Let's take a look at today's trends thus far. Okay, it started out at above 15, went down. It sounds like it's going back up. I'm just going to go ahead and take the money and run right now. I'll be happy with 800 bucks. Done. Go to portfolio. Okay, hasn't executed yet. So let me refresh this here and see what happens. There we go. Padaya. We got them both up there now. So, come on back. Now, if you look, we're sitting at 24x. Now we're at 26. Let's see what we got there for. Oh, I see what happens. I was going to say that looked a little short. As it stands right now, they were able to execute 3 of my 5. So I still got 2 more or less out there. But if you notice, of those 3, this went up correspondingly. So bottom line is you see that as they execute that, this here buying power increases. So that's where that money is going. So I'll go ahead and give it a weight. Let's just take a look. I'm going to take a look at the history real quick. History. All right, that's how much we received. 213 bucks on 3 contracts at 71. We still got 2. We should still have 2 pending. All right, we'll keep watching this number right here. All right. I'll update you whenever this comes back. Oh, look at this. The price just went up again to 28. So that means we probably picked up another. There we go. Looks like everything's been updated. We got actually all 5 of the contracts that we sold is activated. So now I have 5 covered calls expiring on the 26th on fuel cells, strike price of 15. And I have 5 contracts for a cash secured put expiring on the 26th of February with a strike price of 15. So total amount made on these 2, total income. And if you notice, I say income generated because that's what we're doing. We're using stocks. We're using shares of stocks, contracts to generate income that hits our account so that we can do whatever at that particular point, what we want to do with it. So let's look at the history. Let's take a look at a grand total. All right. That's call put. There we go. It was 355 bucks. for the calls that we receive and $505 for the puts. That give us a grand total of income generated for fuel cells of $860 for 1 week. Now, one or two things is going to happen by the close of the market on the 26th. If fuel cell is above $15, the call options, those 5 contracts on the call options, will be taken away from us and sold at $15. If it is below $15 come the close of business on the 26th, then what will happen is the call option will expire worthless, and the put cash secure puts, we're going to buy 5 contracts at $15. In other words, 500 shares at $15. And if that happens, that'll give us a total of 1,000 shares with a cost basis of $15. The next following week, all I'm going to do is write covered calls. I'll do what's necessary the next following week, whether it's write a covered call or cash secure put, to generate money for that week. The very first week, remember, the first week that I started this real strategy with fuel cells, we picked up $520. Yeah, $520. So if you add that 520 to this 860, 2 weeks, $1,380. That's going to equate to a 9% return on the investment of that $15,000 in a matter of 2 weeks. That's why I love selling options for premiums, and I love the wheel strategy. Sell a cash secure put, get money. Once it's assigned to you, turn around and sell the covered call and repeat. Keep repeating. All right, very good. I'll update you guys on the next video, and we'll see what happens with this. Take care. Bye-bye.
Come on now.
That's right. Go ahead and hit that like and subscribe buttons, followed by that notification button. That'll help out the channel. Thanks.